Ladies and gentlemen, what I'm about to tell you might sound like science fiction, but it is anything but. Imagine a world where silver, the metal most people dismiss as ordinary, suddenly skyrockets by 9,000%. Imagine gold, the ultimate hedge against the reckless destruction of paper currency, soaring to an eye-watering 180,000 an ounce. That's not a fantasy. That's the reality we are staring straight in the face. And if you're still holding your wealth in fiat dollars, you are sitting on a ticking time bomb. What we are witnessing in the silver market is not just a price movement, it is the beginning of a historic reckoning. For decades, silver has been dismissed, relegated to industrial uses, and seen as a secondary precious metal overshadowed by gold. But make no mistake, silver is far more than a commodity. It is tangible wealth, a finite asset that cannot be printed or created out of thin air. And yet for decades, its true value has been suppressed by governments, banks, and financial institutions that benefit from keeping paper, money in circulation while real money languishes in obscurity. What the market is whispering now is terrifying for those clinging to fiat currency. Silver is on the verge of a massive revaluation, one that could redefine wealth as we know it. The talk of a 9,000% increase may sound absurd to the uninitiated. After all, we are so conditioned to think in terms of incremental growth, minor fluctuations, and controlled monetary policy. But the reality is that silver's price has been artificially suppressed for decades, kept low. Through manipulation and excessive paper trading, the fundamentals, the reality of supply and demand, tell a very different story. Silver is scarce. The amount of newly mined silver is minimal compared to the immense global demand for industrial, technological, and investment purposes. Above ground, the stockpiles are limited, and yet the markets have pretended otherwise, treating it like a common commodity, failing to recognize that silver is real money, wealth in its most honest form. Every central bank decision, every new stimulus package, every reckless increase in the money supply erodes the value of paper currency, and it is in this environment that silver becomes not just relevant but essential. When the world's paper money loses purchasing power, silver and gold do not. They retain value because their supply is fixed and their desirability is universal. A revaluation of silver is not a speculative gamble. It is an inevitable correction to decades of distortion and manipulation. The question is not if it will happen, but when and how severe it will be. Consider the scale of the imbalance. On one side, you have the fiat system expanding with reckless abandon, governments issuing debt at rates that defy comprehension, central banks buying trillions in assets, and the media reassuring the public that everything is under control. On the other side, you have silver, scarce, tangible, and increasingly in demand as an industrial metal and a monetary asset. The math is simple, and yet it is ignored at society's peril. When the world finally recognizes the disparity between real wealth and worthless paper promises, silver will not inch higher. It will soar. Markets do not move linearly in moments of truth. They explode, and silver is poised for such an explosion. Investors who understand this are not waiting for silver to catch up to its true value. They are positioning themselves today while most are distracted by fleeting trends and illusions of stability. There is a window of opportunity, and it is closing rapidly. Every day that passes without action is another day where fiat holders are quietly losing their purchasing power. By contrast, silver's trajectory is clear. Scarcity, growing demand, and the inevitable failure of the paper system point toward a monumental price surge. When it happens, it will not be gradual. It will be sudden, violent, and transformative. Those who act early will preserve and multiply their wealth. Those who wait will be left behind. This is not fear-mongering, it is arithmetic. The world is awash in debt. Global currencies are being devalued, and the tools of conventional finance, bonds, stocks, and cash are increasingly inadequate to preserve real wealth. Silver is not a hedge in theory, it is a hedge in reality. The same forces that have driven gold to record highs historically are now aligning for silver. Yet most people continue to dismiss it, to ignore the signals, to cling to the illusion that fiat money is stable. History has never been kind to those who confuse paper with real value. Those who fail to recognize silver's impending revaluation will be forced to pay the ultimate price, lost wealth and diminished security. As the pressure builds, it is critical to understand the dynamics at play. Silver is not just an investment, it is a statement about the fragility of the financial system. Each ounce represents preserved wealth, a hedge against the monetary policies that threaten the purchasing power of everyday people. The manipulation, the suppression, and the artificial stagnation cannot continue forever. Markets have a way of correcting themselves, and silver's correction is overdue. When it finally occurs, it will be swift and dramatic, reshaping portfolios, economies, and perceptions of wealth itself. The time to recognize this truth is now, not after the surge has already begun. Action, not observation, will distinguish the financially secure from the financially ruined. In the end, a silver revaluation is more than a market event. It is a reckoning for an entire system built on illusion. The numbers being discussed, extraordinary multiples, massive gains, are not fantasy. They are the inevitable consequence of decades of monetary irresponsibility. Silver has been undervalued, suppressed, and ignored, but its time is approaching. Those who understand the math, the scarcity, and the destructive trajectory of paper money will act now. Those who don't will wake up to a world where real wealth is no longer measured in dollars but in ounces of silver. Wealth that cannot be printed, cannot be manipulated, and cannot be destroyed. In a world drowning in debt and paper promises, gold stands alone as the ultimate protection against the collapse of monetary systems. It is not a speculative investment. It is insurance against a failure that governments and central banks are working tirelessly to conceal. Everyday currencies are being devalued through reckless printing, financial engineering, and the creation of trillions of new dollars, euros, and yen out of thin air. And yet most people continue to act as though their money is safe, as though the paper they hold represents real wealth. They are wrong. Gold, the oldest and most reliable store of value in human history, is the only asset that retains purchasing power when fiat currencies are systematically destroyed. The idea that gold could reach unprecedented heights is not driven by fantasy or hype. It is driven by arithmetic. Governments around the world are addicted to borrowing, spending, and printing. Debt levels are so high that even modest interest rate increases would trigger financial chaos. Inflation, disguised under euphemisms like price stability or quantitative easing, is eroding the value of savings at an alarming pace. Paper currencies are losing value every day, and the people who cling to them are quietly losing wealth. Gold, in contrast, cannot be printed, cannot be manipulated at scale, and cannot be destroyed by fiat policy. Its supply is finite, its demand is global, and its value is recognized universally. When we talk about gold as a hedge, we're not talking about a marginal advantage or a speculative bet. We are talking about preserving purchasing power, protecting life, savings, and maintaining the ability to survive and thrive in an unstable financial environment. Every ounce of gold you own is a safeguard against the inevitable consequences of excessive debt, reckless monetary policy, and currency debasement. While stocks, bonds, and cash are vulnerable to the winds of policymakers, gold is impervious. It cannot be devalued by legislation, cannot be diluted by central bank actions, and cannot be rendered worthless by inflation. The recent discussion of gold potentially reaching astronomical levels is a reflection of the underlying fragility of the system. It is not a dream, it is a mathematical consequence of decades of fiscal irresponsibility. As governments continue to expand their balance sheets, as deficits grow and debt multiplies, the true cost of maintaining the illusion of stability becomes unbearable. The longer authorities delay the inevitable adjustment, the more severe it will be when it comes. And when the world finally acknowledges the fragility of paper money, gold will soar, not gradually, but dramatically. Those who understand this reality have positioned themselves now before the masses awaken to the truth. History provides ample evidence of gold's role as a hedge. Whenever fiat systems have collapsed, gold has preserved wealth where paper money has failed. The lessons are clear. During periods of currency debasement, social unrest, and economic instability, gold retains purchasing power while paper loses it. The current environment mirrors these historical precedents. Inflation is rising globally, debt levels are unsustainable, and confidence in government's ability to manage the financial system is eroding. Those who ignore this reality do so at their peril. Gold is not a choice, it is a necessity. The psychology of investors further reinforces gold's role. During crisis, fear drives people toward real, tangible assets. Unlike stocks or bonds, gold cannot default, cannot go bankrupt, and cannot be diluted. Its physical presence provides security in a way that paper cannot. The very notion of holding gold is a statement of skepticism toward the financial system, a recognition that the promises of governments and central banks are only as strong as the trust people place in them. When that trust erodes, as it inevitably will under the weight of unsustainable debt and reckless monetary policy, gold becomes the refuge, the safe harbor, and the ultimate protector of wealth. Gold's scarcity amplifies its power. Unlike paper, which can be created endlessly, or digital currency, which exists only in computer records, gold is finite. Its extraction is costly, and its supply grows slowly as global demand rises for both investment and industrial purposes. The pressure on the market intensifies. The system cannot create gold in unlimited quantities, and this scarcity becomes a powerful driver of value when fiat money loses credibility. The coming years are likely to see an accelerated recognition of gold's true value as people scramble to protect their wealth before it is too late. Ignoring gold as a hedge is a luxury the world can no longer afford. The risks of fiat collapse, inflation, and currency debasement are no longer theoretical. They are real, measurable, and escalating. Each day of inaction increases exposure to the loss of purchasing power, while each ounce of gold owned provides protection, stability, and confidence. The system cannot maintain the illusion of stability forever. Gold is not just an investment, it is a lifeline, a defense against the financial storm that is already gathering on the horizon. In the end, the logic is inescapable. Those who rely solely on fiat currencies are taking a gamble with catastrophic consequences. Those who recognize the immutable value of gold are not speculating. They are preparing, preserving, and securing the one asset that can survive the destruction of paper money. The world is on the brink, and gold is a shield that can protect against the coming monetary collapse. To own gold is to own certainty in a world of uncertainty, to retain power when paper fails, and to act wisely while others cling desperately to illusions. The time to act is now, because the monetary collapse will not wait, and the preservation of wealth is a responsibility that cannot be postponed. The global financial system is teetering on the edge of collapse, and yet most people continue to act as if nothing is wrong. They trust that governments, central banks, and financial institutions have everything under control, that money in the bank is safe, and that inflation is just a temporary inconvenience. The reality, however, is far more dire. We are living in a world awash in debt, where the total obligations of governments, corporations, and households have grown to levels that are mathematically unsustainable. The consequences of ignoring this are catastrophic, and they will manifest through currency devaluation, financial instability, and a systemic collapse that could dwarf anything we have seen in modern history. Currency devaluation is not some abstract theory. It is happening right now all around the world. Governments are printing money at unprecedented rates, flooding the system with new currency to fund deficits, bailouts, and endless spending programs. Each new dollar, euro, or yen reduces the value of the money already in circulation. Every person who holds cash is quietly losing purchasing power, even if the decline is gradual and invisible. The illusion of stability only lasts as long as the printing press keeps running. Once confidence falters, the collapse is swift and unforgiving. History has shown that no fiat currency has ever survived the cumulative effects of uncontrolled monetary expansion. The problem is systemic. This is not a failure confined to one country or one central bank. It is a global phenomenon. Debt levels have skyrocketed everywhere, and financial institutions are interconnected in ways that magnify risk. Banks are leveraged to the hilt, derivatives markets are enormous and opaque, and governments are reliant on the continuous flow of cheap credit to maintain the illusion of solvency. If interest rates rise even modestly, the entire system could unravel almost overnight. Investors, retirees, and everyday citizens who rely on paper assets are sitting on a fragile house of cards, and the slightest tremor could trigger a collapse. Central banks pretend to have solutions, but their tools are failing. Quantitative easing, negative interest rates, and emergency liquidity programs have only papered over the cracks. They have postponed the inevitable, but they have not eliminated the underlying risks. In fact, they have amplified them by encouraging governments and individuals to borrow excessively. Central banks have created a debt-fueled illusion of prosperity. The result is a system that appears stable on the surface, but is fundamentally fragile underneath. When the next shock arrives, a financial crisis, geopolitical instability, or a sudden loss of confidence, the consequences will be magnified by the very policies designed to prevent it. Currency devaluation is the mechanism by which this fragility is exposed. As more money is printed, each unit becomes worth less. Prices rise, savings are eroded, and wealth is quietly transferred from those who earn and save to those who benefit from debt and inflation. People cling to the belief that their money holds value even as the purchasing power of their wages, pensions, and savings steadily declines. Those who fail to recognize this are making a fatal mistake. The real story of the financial system is not growth or stability. It is the slow destruction of the currency itself. Systemic risk is further compounded by the global nature of finance. No country operates in isolation. The collapse of one major economy sends shockwaves across borders. Banks fail, currencies lose value, and markets spiral into panic. Investors may believe they are diversified, but in reality, global interdependence means that crises are contagious. What starts in one region can quickly engulf the entire system, leaving unprepared individuals and institutions exposed. The era of thinking that you can insulate yourself through local investments or cash holdings is over. The risk is everywhere, and ignoring it is not a strategy, it is a gamble with catastrophic stakes. The consequences of currency devaluation are not limited to numbers on a screen, they affect real lives. Inflation erodes the ability to buy fuel and shelter, retirement plans fail, businesses struggle to survive as input costs rise, the middle class, the backbone of the economy, is particularly vulnerable. Those who cling to paper money are the ones most exposed because their wealth exists primarily in units of currency that are steadily losing value. Meanwhile, those who hold tangible assets, commodities, precious metals, or real estate are positioned to weather the storm and even prosper when the system finally corrects. We are approaching a moment of reckoning. The policies that have sustained the illusion of stability for decades are no longer sufficient. Debt is unmanageable, deficits are enormous, and currency devaluation is accelerating. Investors, savers, and ordinary citizens need to recognize that the system is failing and act accordingly. Ignoring systemic risk is not a viable option. The window of opportunity to protect wealth is closing, and the consequences of inaction are severe. The choice is clear. Either acknowledge the fragility of the system and position oneself accordingly, or remain vulnerable to the inevitable collapse that history shows will occur when debt and monetary excess reach unsustainable levels. In the end, systemic risks and currency devaluation are not hypothetical threats. They are real, measurable, and imminent. Every policy decision, every new dollar printed, and every financial innovation that ignores underlying economic realities only increases the risk of collapse. The truth is uncomfortable, the system is broken, and its survival depends entirely on the continued faith of the public in money that is losing value every day. Those who fail to act now will face the consequences. Those who recognize the signs and take steps to preserve wealth will survive the coming upheaval and emerge in a position of strength. The clock is ticking, and the reality cannot be ignored. Time is running out for investors who fail to recognize the severity of the financial storm approaching. The truth is uncomfortable, but it cannot be ignored. The world is awash in debt, currencies are being devalued, and the monetary system is failing right before our eyes. Yet, most people continue to sit on the sidelines, convinced that they have time, that the system is stable, and that their paper assets are safe. They are mistaken. The opportunity to protect wealth, preserve purchasing power, and position oneself for the inevitable correction is finite, and it is closing rapidly. Every day of inaction is a day in which real wealth is quietly being destroyed. The urgency for investors stems from the relentless erosion of fiat currency. Governments around the world continue to print money at astonishing rates, funding deficits, bailing out failing institutions, and creating the illusion of economic stability. Every dollar, every euro, every yen issued in this manner reduces the value of the money already in circulation. Inflation, though often disguised as moderate or transitory, is systematically eroding purchasing power. Those who hold cash, who cling to savings accounts or bonds, are steadily losing wealth without even realizing it. The longer they wait, the more purchasing power they will sacrifice, and the more urgent the need to act becomes. Investors who recognize the risks understand that traditional assets are no longer reliable. Stocks are artificially inflated by central bank intervention, and bond yields are suppressed to levels that cannot compensate for inflation. Real estate,